Well, good evening. It is the Quintessential Show. My name is Quintus. You are live on qessential.co.za and on Quintessential ZA's live YouTube stream. It's good to be back. It is our digital talk show where we talk to the movers and the shakers in South Africa. And yeah, I don't know about you, but I've missed this show because we didn't do a lot during lockdown because that was kind of depressing. But we are back to talk about all things finance, politics, business, all of that in between. During the lockdown, what I did and what my friends did, we took March 26th as a signal to start looking at our finances, and I think a lot of young South Africans potentially did that as well. So we built a Excel spreadsheet amongst all of our friends. We called it the 50 Shades of Green Excel spreadsheet, and we took a look at South African companies to see how they were faring during the economically devastating lockdowns, and to see how the stock market behaved while they were, locking down our economies. And so we kind of tracked them from March 26th, and we do it now every Sunday. Me and my friends, we get together virtually, and we start talking about finance and where do you have things invested. And one of the companies that was on this Excel spreadsheet, the 50 Shades of Green TM spreadsheet, was Sygnia. And to my relief, it was one of the companies that stayed in the green during this period, and it is, to my relief, still in the green. Today I'm speaking with the joint CEO of that company. Her name is Magda Wierzycka. Hello Magda, how are you doing?
Hi, Gwyneth. I'm well, thank you.
Sorry, I'm using the Afrikaans Magda. Is that okay? Is
No,
that
it's actually a Polish Magda.
a Polish Magda? Okay, fine. I'll meet you halfway, Magda. How about that?
Well,
Listen, Magda, you know the old adage, which is don't invest what you don't understand in, right? You shouldn't be
correct.
putting money into things that you don't understand. So this is kind of a general 26-year-old's guide to Sygnia tonight. And so, but I guess, young and old investors want to know about Sygnia because they see it on their either stock brokering platform or they see it maybe on their social media. Personally, I saw it on Easy Equities, and I said, well, here's a company that's selling S&P 500 ETFs, and people say you should Warren Buffett says you should put money into an S&P 500. First, give us a little bit of the history, a little brief history of Sygnia. Where did the company start? How long have you guys been going?
So Sygnia started with literally 6 people in the room in November 2006. So I ran a company called African Harvest. We sold the company to KDs, and during that sale transaction, some of my executive staff came to me literally in the middle of the sale transaction and said to me, Magda, what are we all doing next? And I kind of went, who is all? And I was given a list of people who were not being sold. They wanted to go and do whatever it is that we are all doing next, which, of course, I had no idea what we are all doing next. So I had to very quickly reinvent what I was selling out of African Harvest and kind of renegotiate the transaction a bit. But, we ended up at in a kind of house, the original Harbour Master's house at the waterfront, actually, which we rented. Yeah. No one wanted because it's 100 years old national monument, so it had certain constraints. And we basically sat around the boardroom table and said, if we are going to start a company, what do we want to do? What sort of a company should it be, given our investment background? And I kind of said to everyone, look, if we are going to start a business, then we must innovate and not imitate. There's no point in trying to chase Coronation, Allen Gray, or Sanlam, or Mutual. And, while we are small, well, actually, we're non-existent at that stage. We have no performance track record other than individual performance track records. We have no clients. We had some very bright software developer. Well, actually, one very bright software developer. Just one. So I said, okay, well, let's look at what can we do to disrupt the financial services industry. And look, it wasn't very difficult. What are the issues? Lack of transparency. So we said, okay, we are going to be completely transparent on fees, charges, everything that we do. High cost, so we are going to be low cost. And we kind of said, if we're going to offer low cost savings and investment products, we need to be radically low cost, not just lower. It must be something that catches people's attention and can't be ignored. So the S&P 500 index tracking fund you referenced, actually the total expense ratio is 0.15% per annum. The management fee is 0.10% per annum. So this talks to this, radical reduction in fees. Then we said, the big drivers. I mean, this is 2006, technology. Anything that we do must be technology enabled. And that's why our very bright software developer came in. We started building systems. And so, we started off in the pension fund market, offering investment strategies and products underpinned by very strong administration driven by the systems we were developing. And we were offering passive investing, index tracking, which still hasn't quite caught on. And because of that, we also decided to offer kind of funds of funds solutions, multi-manager solutions, where we would blend together our index tracking funds, which was with some actively managed products offered by, Coronation of this world and Ellen Gray of this world. And it's not that I believe in active management, which I don't, but reverse back to 2006, and I don't think anyone was willing to trust 100% passive management. Everyone wanted to still invest with Coronation, Ellen Gray. So we kind of went, well, let's structure products which marry the two. So that took off quite well in the retirement fund space. And then, over time, we built up Sygnia into, fast forward to 2020, and we are listed. We actually listed on the JSE in 2015. We are a medium-sized financial services group. At the core of everything we do remain passive products, index tracking funds, as well as funds of funds. And, we then offer institutional clients all the advantages of various pooled portfolios, unitized portfolios, segregated mandates. And then we also launched our retail, individual market savings and investment offering, which is a combination of, we have unit trusts, we have exchange traded funds listed on the JSE, we have savings products, so everything from tax-free savings accounts, retirement annuities, preservation funds, the typical range of savings wrappers that you would want to use in order to ensure that you save in a tax-efficient manner. We have an LISP administration platform, so you can access all our products and competitors' products through Sygnia. So, over time we've built up, and then we also have umbrella funds for retirement funds again. So over time we've built up a company which manages roughly 250 billion in assets. We employ about 250 staff members. We have offices, Cape Town, Joburg, Durban, and London. We are we are one of two largest passive managers in South Africa between ourselves and Cetrix. Second largest multi-manager company after Alexander Forbes Investment Solutions offering. We actually are quite proud of the fact that we achieved all of that without any capital backing us. So there was no money behind Sygnia. There wasn't some fund there who provided us with startup capital. I don't think I drew a salary for the first 3 years or 4 years out of Sygnia. I still kind of draw a minimal salary today because I still view it as an entrepreneurial business, although it has grown up.
Yeah, look, I mean, the name among investors and friends who are also investors, we all know Sygnia, but that's why I'm looking at your individual, the things that you make available for individual investors, and that's the thing. This whole democratization process that's happened in the financial industry to bring these fees down so that South Africans are able to get involved in the market for a very low fee. That is that is the most important thing that kind of got me broadcasting and saying, guys, it is actually possible to get a slice of the market. And especially during COVID-19, I mean, when you guys started this in 2006, is COVID-19 potentially the most scary moment of the company's history, because nobody really knew what the markets were going to do when COVID-19 rolled around?
Absolutely. Look, I mean, I think one can't underestimate, this pandemic and the effect it has had on global economy and the years it will take us to recover from what has happened. When this whole crisis started, I literally the day after President Ramaphosa stood up and said, we're going into lockdown for 3 weeks, I didn't start a spreadsheet. I called the constitutional lawyer, or Silk, the top constitutional Silk in South Africa, and I said, this is a complete disaster. I want to take government to court. This is going to kill South African economy, and not that there was much to kill. We were flatlining already. Mm-hmm. It's going to cause massive unemployment, social unrest, hunger, the economic and social consequences of locking down a country such as South Africa, particularly that it's not going to be effective, are going to be tragic, a much bigger tragedy than potentially the risk of, COVID-19 itself, because, realistically, South Africa is a Sweden. The only people who really complied with lockdown and could comply with lockdown were the marginal middle class that we have in South Africa, which was really not even 10% of our population. People living in townships, crammed in rooms, 5 to a room, had no, idea of and no ability to socially distance. So in fact, we weren't achieving anything beyond killing the economy. Unfortunately, the top Silk in South Africa said to me, Magda, you're going to lose this case. You're going to come up with your very complex economic, arguments, and there's a guy sitting on the bench, the judge, and the government is going to come in, and his government is going to say dead bodies. We'll match her for every argument she makes in terms of future. Mm-hmm. We are going to match her with current number of people dying, and I'm going to lose. And of course, look, hindsight is a 20/20 science. But, I think we cannot underestimate from any perspective what has been done and the damage that has been done to South Africa. And in particular, South Africa was such a fragile economy where, we have the largest and the biggest amount of inequality in the world. So we are the country with the highest degree of inequality in the world. You know what average salary is? So 50th percentile salary in South Africa is 3,600 Rand. So 90th percentile is people, in the top 10%. That benchmark is 22,000 Rand a month pre-tax. So, I suspect that most of the viewers of this YouTube channel, as much as people always think they don't have money, I suspect majority of you are sitting in that 10% of South African population. So 90% of our population earns, if anything, if it's not social grants, less than 22,000 Rand a month. And that is, horrendous from every perspective. And something like this lockdown has clearly just exacerbated that inequality. And, it's going to take us a long time to get over this.
Yeah, but that's the issue that I'm sitting, like say for instance, those people that make 3,000, they're probably not going to be a customer tomorrow to invest in some sort of fund. But say for instance, somebody who's making 22,000 Rand as a salary, they might consider potentially putting a little bit of money away into a fund. That's why this channel exists, for that small section of society. And that's what I'm saying, and how I precursored the whole conversation was, I mean, all of my friends and all sorts who are parts of all sorts of occupations got together and said, listen, we got to start thinking about money right now, because this thing has the ability to totally wipe out people's salaries. And the problem with South Africa is that whole hand-to-mouth economy that we run, and no one is shoveling their money into something that passively makes them money over time. But so your fees are low enough for somebody to get into them. And like I said at the beginning, I found you guys on Easy Equities. So then, you go through a broker and you invest. You can also go as an individual investor to your website and open an account there.
Indeed, you can go to our website, open an account on our platform. We don't charge administration fees, and you can invest in our products, and you can also commingle our products with other asset managers' products, and then you're kind of managing one account.
Okay.
So you can access our products through our website. You can access them. You can access the exchange traded funds, the ones that are listed on the JSE, through any stockbroker, including Easy Equities. But unit trusts you can access through our website.
For sure. Talk to us about exchange traded funds, though, because I had a conversation with a student at Stellenbosch on my trip when I was down in the Western Cape the other day, and second year and doing statistics, and I was talking to him about exchange traded funds, and he had no clue about what exchange traded funds were, and that's another reason why we started the finance section of this website, is to kind of get into what exchange traded funds are and how exactly does Sygnia put an exchange traded fund together, package it up, and then get it to markets.
So exchange traded funds are actually complicated, and yet they're not complicated. So, if you understand the concept of, if you have a whole lot of smaller investors or individual investors, you're not going to run or manage the money on an individual basis. You pull the money together in a, structured savings product. And a very good example of that is a unit trust. So instead of owning the shares directly, you buy units in a unit trust. The fund manager of that unit trust takes that money together with the money of 1,000 other investors, and now purchases shares with that money. So the fund manager only sees one fund, whereas there might be 1,000 investors holding units in that fund, and every unit is worth exactly the same amount. And it's priced, the shares are valued on a daily basis, and the unit price reflects the valuation of the fund. Mm-hmm. Now, an exchange traded fund is a unit trust, but with a difference. It's a unit trust which is also listed on the Johannesburg Stock Exchange. So in a traditional unit trust world, if you buy a unit trust, there are certain cutoff times in terms of, if you invest before 10 o'clock in the morning, your money will be invested at the unit price as calculated the night before. If it's after 10 o'clock cutoff, then your money will be invested, at the end of the day. Basically, it's 3 o'clock in the afternoon. And it will be invested, so, at whatever the valuation of the fund is, at 3 o'clock in the afternoon. So if it's a Monday, you put in your, 1,000 rand, the money will be invested at 3 o'clock in the afternoon. Listed unit trusts, called exchange traded funds, have the advantage of behaving like a share. So the same units are now listed and priced on a continuous basis via the way the markets function. So there are forces of supply and demand. So it's not necessarily perfect pricing, perfectly reflecting the value of the underlying shares, but it's close enough typically, because, if there are some discrepancies, there are bigger fish in this pond who come in and start arbitraging things away. So basically what you are able to do by investing in an exchange traded fund or a listed unit trust is you are able to invest your money immediately. So you don't have to wait for 3 o'clock pricing. If you are investing at 11 o'clock and you see a particular value of the exchange traded fund unit, like a share price, you invest at that price. Mm-hmm. And if you want to disinvest, you disinvest at the price that you see right there and then on the screen, as opposed to, again, waiting for 3 o'clock pricing, where, a lot can happen in 5 hours, as we know. Mm-hmm. So exchange traded funds are not that complicated. There is always, because it is literally a unit trust, which is listed, so it is governed by the same regulation as unit. It is a unit trust. Yeah. Same regulation applies, same protections. But in addition to that, it's also listed on the Johannesburg Stock Exchange. And then to ensure that, and this is what sometimes makes things a little bit more complicated, is you obviously have to ensure that you can sell your units on the JSE. Mm-hmm. You can always disinvest from a unit trust, because the manager will just take, the shares, sell the shares, and pay you out your money, within 24 hours. Mm-hmm. But on the JSE, how do you ensure that selling your unit, that there's a buyer for your unit that you are selling. And so what you have to do as a manager of an exchange traded fund, you have to appoint someone called a market maker. And those are invisible institutions. They usually giant, the one we employ called Jane Street, you would never have heard of, but they are a ginormous financial services firm, not based in South Africa. And they are the buyer and the seller of last resort. So they will always make you a price. We pay them a fee to always make you a price. So even if you want to sell your units and there are no buyers, the markets are falling, everything is crashing. In theory, you can withdraw from a unit trust, but you can't sell your unit listed on the JSE. So that's where the market maker steps in. And we pay them a fee, and they will always buy that unit away, from you. So there's always liquidity.
So even if I'm selling it in 30 years, 40 years, because some of us are using exchange traded funds as this investment vehicle that we're going to leave to grow. So they're even going to no matter what the price.
It's perfectly fine. Then the other thing about exchange traded funds is that they're not actively managed. So portfolio managed or unit trust managed by Coronation, Allan Gray. There are fund managers who decide whether MTN outperforms ABSA, whether Standard Bank outperforms FNB. These kind of active decisions around stock selection. Exchange traded funds have a requirement that there is an index. So the index can be the entire market, something like the JSE All Share Index, JSE Top 40 Index, JSE Bond Index. So it doesn't matter what MSCI World Index, S&P 500 Index. So there is an independent calculator entity that calculates, a company that calculates an index, which is basically, a calculation which takes into account, looking at S&P 500. It's the top 500 companies listed on the S&P, and they are weighted by their size. Which jargon, investment jargon, it's market cap, but it's basically the price of the share multiplied by the size of the company, and it all gets added together to calculate one price. And that is reflective, and it's supposed to be reflective of the entire market. So of course there are many different indices and many different providers of indices. Probably S&P is very well known, MSCI is very well known, JSE calculates its own indices, FTS together with FTSE. And then what you are obliged to do as an exchange traded fund provider is you are obliged to select an index for your exchange traded fund, whatever that index is, and then you have to track it. So basically you have to buy shares which in exactly the same proportion as what they are included in the index. The index is just a mathematical calculation, which is supposed to reflect the market performance. What you are supposed to do with an exchange traded fund is you are obliged to have this benchmark and then to buy shares in exactly the right proportion to be reflective of that benchmark index at all times. So, as things move, you buy and you sell. If shares or companies come into the index, which they regularly do, or fall out of the index, as they regularly do, then you have to adjust the composition of your portfolio, which mirrors, or literally tracks your selected index. So this is, but of course, there are thousands of indices. So you've got a very wide range of investment strategies that you can follow and invest in.
Right, yeah. I mean, the S&P 500 the other day, they were talking about Tesla and potentially taking Tesla out of the S&P 500. So does that indicate that, volatility stocks are something that is now considered to be, we're going to weight them based on volatility as well?
So Tesla was an example of exactly people like you and spreadsheets. You were not alone with your friends and millennials and Generation Z and
Zoomers.
And basically saying, how do we start saving? How do we start trading? And there is this platform that was launched in the US, and do your research. So this is not a recommendation at all. It's actually a warning.
Yes.
But there was a platform started, called Robinhood. And there was huge amount of day traders. So basically people sitting at home, not necessarily saving for the long term, but imagining that they can trade stocks on a daily basis and make money on a daily basis. Lots of youngsters and huge volumes. I mean, the volumes just rose exponentially through the COVID-19 crisis.
Right.
As people potentially lost their jobs, didn't have enough to do, went studying, they started trading like mad. Now, what you need to know about financial services industry is that, the day traders are gamblers. You basically have Robinhood, and think of Robinhood as a casino. Lots of people, millions, trading where they actually have no particular knowledge of what they're trading in. So they will just jump on anything that's rising. It's this kind of follow the herd mentality. Tesla being one of those companies that caught the imagination. Now, you thought it caught the imagination and suddenly everyone was buying. Well, guess what? There are much more sophisticated institutions behind the scenes who can anticipate the behavior of the uninformed masses of people and profiteer from either front running those kind of purchases or taking positions against those kind of a very good example is actually fueling a rise in a share price. So all the day traders jump on the bandwagon because they're seeing Tesla share price move up 5% every day. Every day it's just going up and up and up and up. So every day trader is going, this is Christmas. I can't lose. I'm buying more. The same institution that trickle-fed money into the system to make the share price rise, and these are large investment banks, by the way, immediately takes an opposite position. And benefits from the share price, then dumps the shares and benefits from the share price fall. So don't assume that there is a free ride in the investment market. So Tesla, exactly that happened with Tesla. There were large institutional players manipulating the share price in order to enhance day traders on the Robinhood platform, to put money into Tesla. Tesla makes no profits. I mean, I know it's a funky and cool company.
in
and
ideology.
makes really cool cars and an ideology and a belief. And there is Elon Musk, but it makes no money. It is still to turn a profit. In fact, it has problems delivering the cars it has pre-sold. So, so the fundamentals of that company are very much premised on, it's kind of fake it till you make it. And many companies listed in the US, by the way, are exactly that. They have never made a profit. So Tesla shot up by, I'm making up the number, but I think it's over like 1,000%. And so people were just piling in, then started falling down. But S&P, suddenly it became bigger than any other company.
Yeah, and so people expect it to be put into the S&P 500.
People expect it to be put into S&P 500, whereas the people who calculate these indices are way too savvy to put in something that, the very next quarter will fall out of the index again, or that will fuel and add fuel to speculative behavior. Because all of a sudden, if you add it to S&P 500 index, then every single credible institution tracking S&P 500 is going to be obliged to buy that share, as a consequence of which we are going to fuel this even more.
But that's, like the trends that people are following now. What I want to say is that, now people follow certain trends, and obviously even on the Sygnia end, you guys have a fourth industrial revolution ETF that you can buy into, that obviously also, tracks a certain indice, correct? And so let's talk about the fourth industrial revolution one in just a bit, because I know you guys have a new fund now that we're talking about trends that come along. And what I want to say is, with this democratization of investing in South Africa, we are looking for trends. It's ever since COVID-19 rolled through, we were like, listen, what should we be buying? Should we be buying Aspen? Should we be buying this? Should we be buying that? Then the president says Aspen, and you say we should have been invested interested. And so I think those kind of things are going around South African people's minds, and I don't want them to suddenly just put money on British American tobacco because they think once there's going to be a reopen that, you know, we're going to make lots of money. Yeah. That kind of thinking is not really happening in South Africa. Like the profits aren't following. So talk to us about this Sygnia Health Innovation Global Equity Fund. Is this an ETF, or is this just a fund that you guys put together?
So look, we've always, and we always like to think that we are innovators and that we look and anticipate trends. So maybe let's touch on the Fourth Industrial Revolution Fund, because I'll get to the healthcare fund just now.
Perfect.
Through that process. So I happened to get exposed to all the trends underpinning the Fourth Industrial Revolution before they actually, kind of hit South Africa and necessarily huge level of awareness. And through that process, I thought, okay, that's a mega trend of the future. Never launch products, incidentally, that don't have longevity. Mm-hmm. So I looked at Fourth Industrial Revolution and I thought, this is a trend. This is an investment trend. You want to be invested in companies which are involved in disrupting various industries, because that's really what Fourth Industrial Revolution is about. It's about technology-driven disruption, not specific to any particular sector, but it's effectively, the underpin to it. So Amazon has disrupted on, shopping.
Logistics,
as an example. Yeah. Logistics, Zoom has disrupted the way we meet and meetings. Tesla will disrupt the car manufacturing market, not only through electric cars, but self-driving cars as the theme of the future. So we looked at the future. This is 2016. And I found an index provider called Kensho in United. They were actually a startup in United States. And, I was watching CNBC and I heard this really young guy talking about Fourth Industrial Revolution and CNBC US channel, yes. Talking about having gotten onto this company, and they have found, they've developed software which analyzes all the companies in the US and looks at the companies which are involved in the developments, R&D related to Fourth Industrial Revolution type trends in various sectors. And they've calculated these indices as a derivative of the fantastic software program. So I got on the next flight to New York, met with him and said, I want to use your indices as an underpin to a unit trust product, and subsequently launched an exchange traded fund. So we launched the Fourth Industrial Revolution Fund in October 2016, exclusive to Sygnia. I mean, the use of the indices is exclusive to Sygnia. And Kensho, the index provider, was actually subsequently bought out within 3 years for $700 million by S&P.
Wow.
I know, only in America. But we launched a Sygnia Fourth Industrial Revolution Global Equity Fund, tracking those indices. And then we launched them first as a unit trust, then as an exchange traded fund. So we've got two products, two unit trusts, one listed on the JSE, one not. And the fund has delivered about 25% per annum return since inception. This is over a period when South African equity markets, I think, are negative.
Right.
Then we kind of thought, okay, technology is actually a big trend in its own right. So Kensho and Fourth Industrial Revolution, that's technology-driven innovation and disruption across many sectors. But there is also a play in the more concentrated version of technology. So that is, Amazon and Apple, Netflix and Facebook, and Microsoft and Google. So then we launched the Sygnia Fang Plus Fund unit trust, which obviously, given the what has happened to technology now through COVID, has outperformed the Fourth Industrial Revolution Fund. Then last year, not during the pandemic, which is why I'm very
happy
specific about it. I did not have pre-knowledge of pandemic, but I promise no one No hidden global domination plan.
Hey, this is YouTube. It's Conspiracy Central over here.
Conspiracy theories. Oh, I've got conspiracy theory for you if you want a conspiracy theory uncovered, but this isn't one. I came across innovation in the healthcare space, and I came across that innovation in the context of a company we invested in the UK called Oxford Sciences Innovation. Mm-hmm. And Oxford Sciences Innovation is actually a joint venture between Oxford University and, at that stage, some leading asset managers in the UK, and we bought out some of their shareholding. And it's the company which has exclusive rights to commercialize all IP coming out of Oxford. So, academics work on a novel drug, the Oxford vaccine, some new device for testing blood pressure or manage, and so it's really this kind of healthcare-based innovation largely. I mean, there's some AI-driven stuff obviously coming out of Oxford and other broader life science. There's some renewable innovations in renewable energy space, but 70% of it is life sciences and healthcare provision. And I looked at that, and so OSI, since it was formed and incorporated as a company and launched in 2015, has actually seeded and spun out 80 different companies, including Vasitech. And Vasitech is the company which stands behind the Oxford Vaccine Project with us, which then entered into the partnership with AstraZeneca for the production manufacturing of the COVID-19 vaccine.
Very interesting. So is that working out? I mean, there was this story that there was, somebody who got sick as a result of this thing. What's the deal with this?
So interestingly enough, so first of all, all the vaccines, as you know, this isn't the only vaccine in development. I think there are 135 vaccines in development right now worldwide. It's the vaccine which is one of the contenders for probably being, first to market and very effective. It won't be the only vaccine. The difference between this Oxford vaccine and all the others is that Oxford University has already said, and Vasitech, the spin-out company that is, owns the IP, they've already said that they will sell the vaccine at cost. So AstraZeneca will actually manufacture, distribute, and sell the vaccine at cost, no profit, until COVID-19 is no longer a pandemic, as opposed to every other company which has said, profiteering, this is it, we're going to make major money out of, COVID-19 vaccines. Yeah. But through so there was look, given that all these vaccines are being rushed through trials, usually it takes about 8 years to develop and test the vaccine. Now we have compressed everything into a matter of months. And as a consequence, it's given that you are rushing to test on, I think Oxford vaccine is now being tested on 10,000 people in South Africa, Brazil, US, and UK. In among those, one person developed some symptoms of some medical condition, whether it's related to the vaccine or not, who knows? If the moment you take 10,000 people, put them in a room, guess what? Someone is going to get sick in a period of 6 months with who knows what sickness. So, given, so the trial then stops while, medical boards evaluate whether the vaccine is a likely cause of whatever condition the person has developed or not. And UK, Brazil, South Africa have proceeded, after scrutiny proceeded. FDA in the United States is still evaluating the case. But, it's one case in 10,000 at the moment that possibly the person has developed a medical condition which might or might not be related to the fact that they got an experimental jab.
Yeah, so media just went with headlines and ran it, and everybody had this idea in their head. Yeah, always going to do that.
Always.
But as an individual investor, can we get into this Health Innovation Global Equity Fund? And
yes.
does that then give exposure to the OSI?
Yeah. So we became the largest clients, the largest shareholders in Oxford Sciences Innovation as a company, but obviously it's a limited pool of shareholding, and we actually last year launched the Sygnia OSI fund, but that got oversubscribed. So we've closed that to new investors. So you could get direct exposure to OSI, very concentrated, but that was oversubscribed by institutional investors in a matter of months. So But then, having been exposed to everything that is happening at Oxford, which is largely healthcare, we developed an investment thesis that healthcare, before COVID, that healthcare is yet another mega trend. Just as technology is a mega trend, just as fourth industrial revolution is a mega trend. And so we decided to launch a Sygnia Health Innovation Global Equity Fund, which invests, again, not only in pharmaceutical companies, it invests in OSI, but it also invests in anything to do with disruption in the healthcare space. It's just, listed companies involved in nanoimaging, for instance, anything to do with life sciences, anything to do with biology, anything to do with how to disrupt existing channels of provision of quality healthcare. And, there's a lot on the go. I mean, it is a vibrant ecosystem, an investment ecosystem. And we think that, and again, I did not envisage COVID-19, but we did think that healthcare is a mega trend.
Yeah. No, well, I think it coincided with government saying that they wanted to do a national health insurance at some point in South Africa and generating this SOE. Right. So what I like about what Sygnia does and your opinions as you hold them is that when government comes to the table with this idea of, we're going to do something, we're going to create a new business, you kind of follow just the alternative trend to potentially actually getting something done, because, government promises these huge things like the NHI, and they're still saying those kind of things. And to investors and people who know how money is put towards these kinds of things, do you see an NHI in South Africa? Is it viable? It just doesn't make sense to somebody who's looking outside in.
Look, NHI is a very noble idea. It's just an unaffordable idea for a country like South Africa. So again, go back to, if you think of 90th percentile is a salary of 22,000 Rand, and we have a taxpayer base of just over 3 million people supporting a nation of 59 million people. We didn't have the tax revenues before to provide quality healthcare for all. So trust me, after COVID-19, we have nothing. Right. The coffers are bare. We are bankrupt.
You still have the health minister saying, well, now even the things that we learned in COVID-19, we're going to push forward.
Noise. Distinguish between political noise and, look, it touches on some very raw nerves. So absolutely what this crisis has brought to the fore is inequality, and that inequality is going to grow after this crisis. Trust me. It has brought to the fore the lack of, healthcare provision worldwide. Look at United States, where there is no public healthcare system whatsoever. There are only private hospitals and health insurance. If you don't have health insurance, you get shoved to the pavement. So, and health insurance is completely unaffordable. So, we're not talking about kind of global inequality just in the South African context as far as healthcare provision is concerned. We're looking at a country like United States of America and saying they've got no healthcare provision for their population. Politicians will always say whatever is populist. Remember what are the incentives to get reelected? So they'll always make promises which they've got no plans to deliver on, no money to deliver on, even if they are populist ideas and they're very noble ideas. But how? We are bankrupt as an economy. So just back to the Healthcare Innovation Fund, because, I tend to go off piste a little bit.
Yeah.
Always. So we launched the unit trust. The fund is available as a unit trust, and we are in the process of launching it as an exchange-traded fund.
Perfect.
As well.
That was my next question to say, I haven't seen it on the broker side, and I would really like to get into this kind of thing.
We're busy with the application processes. It's a little bit more complex to launch longer. It takes longer to get approvals for an exchange-traded fund than a unit trust.
Do you think it'll be done before 2021?
Yeah, within the next couple of months, the next couple of months. But in the meantime, you can invest in the unit trust. Exactly the same thing, and then switch to exchange traded fund. when you want to. So, you don't have to finesse your timing around our launch.
Okay, yeah. So you should rather just go through the website and then talk to you guys directly.
Exactly.
Okay, very interesting. No, listen, I kind of got you on to the show to talk all about these things and investment literacy in general. And I think you've given a lot of people a lot of information to maybe go and research even more. So I'm very, very interested in this Oxford Sciences Innovation PLC that you guys are the the biggest investor in at the moment now. And so so that's almost like you're going to be able to bankroll the eventual vaccine, right? I mean, a South African should feel good about something like that and they get exposure to that. So that was very interesting. But look, investment literacy in South Africa, obviously not what it should be. Now you are a South African activist when it comes to South African financial health and ending corruption. We see the trade unions, they are conducting a huge protest today and most likely throughout the week. What do you recommend to get South Africa back on track in lowering unemployment and better GDP growth post-COVID?
So you are the third person. I'm doing the third webinar today.
Well, now you've had practice.
I did couple yesterday, and so my thesis is evolving. But so this is the thing, through my thinking, when I look at South Africa, and we're in trouble. So one, we're in trouble. Two, we are on our own. Every single country in the world is in trouble. Mm-hmm. So no one is coming to our help, to our aid. We have a government where I've increasingly have become convinced that, everyone always talks about coalition governments, and we are living under a coalition government, but it's not a coalition government the way you think. We've got a government which is effectively made up of factions. So we have the good ANC, the bad ANC, and trade unions in the mix. Mm-hmm. So you've got complete, decision-making paralysis at government level. And then we have, not dissimilar to state capture days, we have population which is pointing fingers at government and saying, why isn't government doing something? What is government going to do? And it shouldn't be, we should not be pointing fingers. The problem is so big that the entire society and business needs to get involved in finding creative solutions to the problems. So, some of those creative solutions, and look, I don't have any influence over what South African government does, but I think that things will get darker before they get lighter. I think you are going to see social unrest, and I think social unrest is necessary. Because social unrest, at the moment it's trade unions, trust me, South Africans will take to the streets soon. Mm-hmm. Social unrest is a very necessary trigger for change. Then what you need, so that's community involvement and societal involvement. The next thing is you need business. You need business to start speaking out. And, yesterday at one of the forums, I was asked, well, how does business get involved? Because government isn't asking us to come to the table. And I basically said, well, if you're not being asked, then you storm the barricades. Then you form a forum and you force your way into the room. I can't believe how we tend to behave like sheep. You've got governments worldwide telling you are going to live under curfew, you're not going to drink wine, you're not going to see your family, you are not going to drive, you're not going to smoke, and we all comply.
Yeah.
Sorry, who made them God? I've lived in communist Poland under that kind of a regime. Why are we complying? Why are we not saying, is this sensible?
Yeah.
So
I think something that you bring up, and something that in the early days of the lockdowns, especially with e-commerce, remember when they said, listen, commerce can reopen, but e-commerce is not allowed to reopen. The problem that most people had with that was that civil society organizations took the government to court instead of the actual e-commerce giants in South Africa. Yeah. And so I just don't understand where business is on these kind of things.
Unfortunately, not where it should be. And that's why I say, things it's the same as state capture. Where was business? And unfortunately, the problem is so huge and so pervasive that business needs to storm the barricades. So, if it was up to me, I would right now put together a think tank of the 20 brightest people in South Africa.
Yeah.
Whether it's business, whether it's politician, doesn't matter. 20, because anything bigger than that, you get chaos. To start coming up and give them ultimate power to come up with solutions. And some of the solutions some of them are obvious. We've got very limited resources. If you have a limited budget, Then you start dieting. Then you need to start cutting spending on things that are unnecessary. SAA is not necessary.
Exactly.
Electricity and water are necessary to our survival. So you need to ensure that electricity and water are stabilized and functioning. A big question mark right now. So privatize or start partially privatizing things that we cannot do without. Mm-hmm. So private sector is involved and committed to things that we cannot get away with or without as a country. Otherwise, we are going to go down the route of Venezuela and Zimbabwe. So stop wasting resources, start pouring resources into the few projects that are essential to the long-term survival of, South Africa. Job creation schemes, unfortunately, we have, in short term created, we destroyed our basic education system. So we need to repair the basic education system. And, right now technology is at a level where if you took every youngster in South Africa, created classrooms made out of containers, issued everybody with free data and a plastic laptop, you could have teachers sitting in Johannesburg teaching thousands, the best teachers in the country, accessing the masses. You would need community involvement and buy-in so the container doesn't get burnt in the process, but it's utterly achievable. So that's a longer term project. Some of the other quick wins, couple of large infrastructure projects. Again, private sector, public sector partnerships. So this, mistrust of corruption, which just reached new levels under COVID, brought out the worst of human nature. And I actually have no words. I thought I had no words after state capture, but actually after COVID-19.
Yeah, South Africa is a very mentally fatiguing country. And it's like you say, you say that things will probably get darker. How much more darker? We did 10 years of a Zuma regime. Now we're going for the next 5 years, thinking how we're going to get this,
Much darker. So prepare for much, but that's why society needs to get involved. You can't be a passenger. You can't sit there, particularly in your age group, point fingers at this, nebulous concept of a government and say the government must. No, it's government by the people for the people.
And that's exactly why, we start shows like this and why we talk about investment. Because what I've looked at the situation was like, well, government's never told me how to invest, so I'm going to go figure out how to invest myself. And then when you see the fruits of your investments, especially when, like the exchange traded funds keep on ticking up and they're linked to offshore growth, then you feel a little less chaotic. But the people that have trusted governments to do all of these things have also trusted them to teach them investment, and it hasn't happened at all. And that's what I'm saying, like what you say now, giving people laptops, you could potentially tell them, listen, for 5 Rand or 10 Rand, you can get into the market. You've got so many people walking around and saying, listen, the economies that they have, the reins are held by other people. But it's like, well, you can get access to the market. So no one, exactly, no one is actually held back.
No one is held back. And, government has introduced, if you look at tax-free savings accounts, so everybody who is saving right now, your first access point or your first savings wrapper that you should invest through, you're investing in your exchange traded funds, yes, but put a wrapper around them, invest through a tax-free savings account. It's the biggest tax break of your working career that government has put on the table to encourage small savers to save on a tax-free basis. So, you can save, I think it's now 35,000 Rand a year in a tax-free savings account, up to a maximum of 500,000 a year, 500,000 in a lifetime, but all the growth that you generate is tax-free.
Exactly.
To me, that is, and you can access that money at any point. So that is, be savvy about how you invest. Look at the tax breaks that are available. Don't just plow your money into an exchange traded fund. That's the investment vehicle. Look at the savings wrappers. I always talk about savings products and investment products. So investment products are your exchange traded funds or your unit trusts. Your savings wrappers are your retirement annuities and largely your tax-free savings accounts. So don't throw yourself at an investment product. First, select the wrapper. And really, at your age group, it's 2. Learn what a retirement annuity is, learn what a tax-free savings account is. Not complicated.
Very, very, very easy.
It's the two products.
Yes,
Two.
exactly. Yeah. Look, we started a basket on Easy Equities. So if you go into your tax-free savings account on Easy Equities, you can now find our quintessential basket, and that has some Satrix products. We also have, and you'll be glad to know, a Sygnia, the fourth industrial revolution ETF in there as well, because we wanted to go to students, we wanted to go to young people and say, listen, if you do feel cold shakes when you think about investment, at least think about this potential list of ETFs that you can then put into your tax-free savings, put it in there, shut the app off and come back a couple of years later. You're going to see growth.
Yeah. Don't trade. So if I was to give you one advice, particularly for your generation, don't believe for a second that just because you've invested in something and that something happened to have been offshore, and I would invest my money offshore, definitely. I think the JSE has nothing to offer in terms of domestic savings and investing, but apart from exchange traded funds, overseas markets. But don't think that just because you've invested in something, you and that something returns 20%, that suddenly you are an investment genius and you should start trading and switching.
Yeah.
Don't think of savings like that. I've given endless seminars saying the following, that every young person should be taught the following: 20% of what you earn every month. I mean, it seems like a lot, but you need that money. 20% of that money should be put into a long-term savings account. So I started saving when I was 25 years old, held down my first job, 24 when I held down my first job. And I always thought about it. I mean, my first salary was 5,000 Rand a month. And I never thought of earning 5,000 Rand a month. I actually always took 1,000 Rand and put it into a retirement annuity. And I'll tell you how much that retirement annuity is worth just now. Because the money I saved when I was 24 was the money that really mattered. It's not the money that I saved now that matters. It's the money that I saved then that has had 25 years of growth associated with it. So that savings pot is worth about 20 million Rand today.
Wow.
And all I did, I never looked at it. I never ever looked at my benefit statements. I never touched that money. I moved that money from employer to employer. And I never thought about it. And I always thought of my salary as being, go back to the 5,000 Rand a month analogy, I thought of myself as earning 4,000 Rand a month. When the money became 10,000 Rand a month, I thought of myself as earning 8,000 and live on an 8,000 Rand a month budget. That's how I run my entire life. I've mentally made myself think that I'm earning 80% of what I was earning. And that money is there for long term. Because, if you actually think of your generation in particular, you are going to live till you are 100 years old.
I hope so.
You will. It's probably not going to be 120 because this kind of huge bridge has already happened in terms of mortality. But you're going to live to 100. You probably are going to retire somewhere around the age of 65 or 70, which basically means that you will have 30 years where you will have to financially support yourself and your spouse and potentially help out your children. 30 years. So you need to start thinking about it now.
Yeah.
How are you going to support yourself for 30 years without an income?
Yep.
And then think about trends. So think about demographics, more people on the planet, fewer jobs. Technology is eliminating jobs.
Yeah.
Technology is not creating jobs, it's eliminating. Fourth industrial revolution is doing nothing for your generation. Nothing. Other than providing you with iPads and funky toys. Tesla is doing nothing.
Well, you see, the fourth industrial ETF is doing wonders for me. So it's,
Absolutely. But apart from that, apart from being an investment thesis, it's doing nothing for creating employment. So there is no answer, incidentally, when you talk to futurists about fourth industrial revolution and the impact on job creation. The answer is, we don't have an answer, but we are sure that something will come up. But when you actually think of self-driving cars, think about self-driving cars eliminating every Uber driver, every taxi driver, every bus driver.
Yeah.
Think of, so there are benefits, and so don't assume that you will be still working at the age of 65, or that there will be these phenomenal jobs paying phenomenal amounts of money.
Yeah.
So you need to start thinking about these kind of things right now.
Yeah, look, there's a guy, Stealthy Wealth. He's a guy that has a website. He wants to retire at 45. His whole website, his whole blog is all about how I'm trying to, retire at 45. But I think he's come to the realization that it's not happening after COVID-19.
After COVID-19, well, again, strangely enough, if you had invested internationally, given the depreciation of the rand, any international investments actually have done very well. It's the local investments that obviously are kind of worth less in dollars, but dollar-based investments are worth a lot more in rands. But
look,
having said
the recovery
that,
of markets was very interesting to see. I mean, we had that March 23 moment where everything was, toppled. But the recovery was, I mean, if you were an investor in your tax-free savings account, you kind of saw my 41% went probably down to 22% in terms of returns, and now it's back to about 35%, 32%. And so,
but why?
Give us the lowdown.
So you always have to look under the bonnet. It has, so. In terms of economic fundamentals, in theory, stock markets, investment markets should reflect the health of the economy. Because at the end of the day, companies survive because people spend money and buy products. That's it. It's not any more complicated. You could reduce the entire, field of economics to consumer spending, and and the ability of people to spend money on rubbish.
I also chalk it down to the uncertainty of the American election sometimes. I like doing that.
The American elections, it's entertainment and noise. I think that, it wasn't before.
Right.
But I think now the problems are so long-term in nature that whether it's Biden or Trump is irrelevant. The problems will not be resolved in the next 4 years. And it actually, I've come to the conclusion that it's immaterial. You can obviously hold views around Trump, and I do, but it's immaterial.
Look, it's early morning entertainment because there's a vice presidential debate at 3 a.m. today. So do you wait up for those things?
Yes.
Perfect.
I tend to watch. I tend to run on a treadmill for 2 hours a day, and so I wake up early, get on a treadmill, and watch.
Yeah, I think I'm going to live tweet it while we're talking. While you're doing that, I'm going to tweet you the best lines.
Oh. Well, trust me, I don't go anywhere. I actually have, in a London apartment, I have a treadmill in a cupboard. I mean, in a kind of little storeroom.
Yes.
My husband just despairs, but I don't go anywhere in the world if there isn't a treadmill. But, the point is that after the global financial crisis, so the economic fundamentals of the world are shot, which means corporate earnings are shot, except for a few tech giants and Zoom, which have benefited. But for most companies, this is a mega crisis. So in theory, share prices should have gone down, but they haven't. They dipped. And so what you've had after the global financial crisis, and it didn't start now, it started after the global financial crisis, central banks worldwide started printing money. And the theory was noble. The theory was, we will print money, we will make the money available to banks. The banks will lend the money onto the consumers, and consumers will spend and support economic growth. That was the theory. So we will print money, allow banks to borrow money from us as central banks at zero interest rates, and banks naturally will do what banks do, which is lend the money on. Not quite. Banks did exactly that. They borrowed the money from central banks at zero interest rates and started speculating with it. And threw that money at investments and at investment markets. So what you've had is, and it continues now, you have had a complete dislocation between the world's economic fundamentals and the performance of companies and share prices. So there's so much money swirling in the system. There's so much money that has been printed and is being printed with negative interest rates. So literally as an investment, you're being paid to borrow money globally. So people do, and then they buy anything going. And that is what is fueling the stock market and the share prices, and it's not the performance of the actual companies, which is why index tracking and buying ETFs is the wisest strategy right now. Because don't tell me that active manager working for Coronation or Ellen Gray right now can look at balance sheets and income statements of collapsing companies and say, okay, this one is going to do, nobody's going to do well.
Yeah.
So stop picking rubbish.
Yeah.
So the best strategy is buy the entire market as cheaply as possible. Close your eyes, because there will be bumps in this road. Think of it as a 40-year journey and forget about it.
Exactly. Yeah, that's why I said, the precursor to the conversation we had, this Excel spreadsheet my friends and I put together was literally just for talking points on a Sunday, to sit there and go like, look at how these companies are going up and going down and going up and going down, and what does this what does this mean in our South African context, And that's the thing, you say don't buy into the JSE, but it's quite interesting to see how things happen on a South African level and how the markets react to everything that's happening in South Africa. You said if you were to put 20 of the best and brightest minds together in South Africa, you would get to work at figuring out all the big problems. But you are kind of doing that if press releases were to be believed. Are you actually coming down back to South Africa to run a season of The Apprentice South Africa? Is that still on the cards? Is that happening? Can I be a contestant if you do?
Hopefully not.
Why? What's happening?
You know what? I think, look at the COVID-19 world. I think now is not the time for banality and, things which are kind of noise.
Yeah.
I think what I will come back with is, so what I've been doing in the UK, I've set up obviously I've set up some venture capital funds. I've gotten, over the last 18 months, I've gotten a lot of exposure to how to actually seed real companies. And, so forget a game show where, you start going, fire this, fire that for entertainment purposes. There's no time for entertainment. We actually have a real job creation problem in South Africa, which can only be resolved. I mean, big infrastructure projects, again, we bankrupt.
Yeah.
So yes, but limited budget. So the only way we're going to get ourselves out of this problem is by people starting small businesses. One man with a good idea, or one woman with a good idea, can create 5 jobs and employ 5 people. And typically what that one person needs is 2 things: a little bit of capital, a little bit of cash behind them, so someone to take a chance, and also someone to mentor them through the process of setting up a business. So this is really what venture capital funds do internationally. So this is how Google started. This is how Apple started. So someone taking a chance, so a fund taking a chance on 2 or 3 budding entrepreneurs who created giants. So what we need in South Africa is we need venture capital to come in, venture capital funds to identify, individuals that can come and approach capitalists with project plans, and the guys with the brightest. So it's a variation on The Apprentice, but done for real, not for entertainment.
Yeah, because I thought you were going to do a Trump trajectory where eventually you become president of South Africa one day.
Oh, please, just don't. Yeah. Even with The Apprentice, and look, with COVID and with everything else, I think people have bigger problems, and there's no obvious way of filming something like The Apprentice where you have to socially distance.
Yeah.
And people are concerned about getting on flight. But even with The Apprentice, when I started to think about it, I thought that The Apprentice in the South African context should have been done not the same way as it was in the US, but rather make it South Africa specific. So the big prize is not a corporate job, which requires you to have university degree and, kind of white collar background.
Yeah.
But rather that it should have been done in the spirit of entrepreneurship. So the big prize is not, I give you a corporate job. The big prize is, I will fund your business.
Exactly, yeah.
So you can, work for or star on The Apprentice show, but the big prize will be the person who wins gets their business plan funded.
You see, I like how you framing that, because that's what we kind of do need in South Africa, even on the investing front. Investors, the smallest investor, the man on the ground, he wants authenticity, even with companies like Sygnia and the brokers themselves. All we want is authenticity, and we don't want it to be flashy. We want to invest in something that is going to actually grow our money, because we have so little in South Africa. So that approach to, like funding businesses that can potentially, generate job growth is I mean, we should please continue doing it, because
the skills I've picked up in the UK, where venture capital kind of funds are very common, more so in the US. I want to bring that back to South Africa and start funds like that. Perfect. So that we can actually start creating jobs even at a micro level, because every little business you fund has the potential to grow into something big. But you know what, even if all you do is create 5 jobs, it's 5 more jobs than there were yesterday.
100%. I will keep my eye on that, and I'm going to call you out if you don't launch it soon, because we're going to need it in South Africa. Listen, Magda, thanks for joining us here on the Quintessential Show tonight. It was fantastic to speak to you, and I hope you'll come back. Actually, I've invited you here to corner you a little bit and ask if you won't become one of our essential voices. So as Quintessential ZA, we have qessential.co.za, and because you're a nation builder to a degree, I mean, you speak a lot about, building the nation of South Africa up to be more financially healthy. I was wondering if you wouldn't mind being one of our essential voices, penning one little blog post on building the nation building in South Africa. And you can relate it to nation building through investment, for example. But we would love to have you on our website and put your voice out there, because you're one of them who we think needs to be amplified a little bit, because people need the kind of literacy, the financial literacy that you guys are putting down at Sygnia. Last question though, I heard on a podcast once upon a time that one day your kinds of companies will pay investors to invest in a particular ETF. Are you going to pay me to get into your next ETF? Because I think that sounds like a good idea.
I think that there internationally, and a couple of companies, in order to protect the revenue from the active asset management side, launched a couple of ETFs which charged no management fees. No one has gone negative. Right. But they actually haven't been a huge success, because they were launched in order to maintain existing investors, invested in expensive products, and then as a sideline investing in a couple of free products. But at the end of the day, when you run an investment product, you need the administration, you need the technology, you need good people running your money. And as much as you don't need to pay them millions, they do have to earn something. So I think that, with exchange traded funds, there is some natural minimum pricing that you should actually be demanding to pay, because, people don't value what's available for free. And if you make anything available too cheaply, then you need to know that behind the scenes you are compromising. You're either compromising on administration, you're compromising on the quality of people, you're compromising on systems. There are compromises built in the, into the equation. So, ETFs in South Africa, I think there's already, very, very slim margin that's being made. And, you need that margin to exist. These are not huge profit spinners. This is not, if you look at the financials of Sygnia, and we listed companies, so it's available, compare them to financials of Coronation. Coronation's bonus pool is, or used to be, when they had better performance, but it's still running somewhere between 800 million to 1.2 billion rand a year, distributed among roughly 260 people. That's what active asset managers make. Then you compare it to Sygnia, which virtually has no bonus pool.
That's why they have such nice cars, the best cars.
The best cars, the best houses. Absolutely.
Well, there you go. So listen, the fees are very low to get into Sygnia products. Go and find them. They could be through your broker. You can go to their website as well, sygnia.co.za, potentially .com as well, sygnia.com. And yeah, that was Magda here, the joint CEO of the company. Magda, thank you for joining us here on the Quintessential Show.
Absolute pleasure.
All right, cheerio. Goodbye.